Welcome to part 2, dollar index and its components. So earlier we were putting in one video all the global markets, that is Dow, Nasdaq, S&P, then dollar index, then Brent, NYMEX and US 10-year yield, Brent and NYMEX and 10-year yield. So there were some requests, people asked us to split input, which is why up to CBOE weeks we will put one video. The part 2 is going to be dollar index and its components, and part 3 will be US 10-year treasury yield and Brent and NYMEX. Okay, so dollar index and its components and USD-INR. Okay, so first we will read out the rates and what percentage is closed, then we can go into the analysis part of it. Dollar index closed at 102.217 this week, 0.4% up for this week, 1.9% down for the month. While euro versus USD, it's 1.0889, 0.4% down and 1.9% up. You see exactly the opposite is happening. Then GBP and USD versus USD, that is 1.2711, 0.8% down in this week, whereas 2.2% up this month. You see that the correlation, inverse correlation between dollar index and euro versus USD and GBP versus USD. Next is USD versus JPY, which is part of the dollar index component, closed at 143.68, 1.3% up for this week and 3% up for this month. Next is USD-INR, that is not part of the dollar index, but definitely we as Indians sitting here and we are interested in how the currency is going to perform, which is why we included this also as part of our analysis. So 81.980, it remained flat this week, but in this month it fell 0.8%. So now let's go into the analysis part of it, right? So dollar index, what it did was it came down significantly the last 3 weeks. Okay, last month it formed a solid green candle. After the last 3 weeks it formed a solid red candle, and then in this week it formed a small green candle, forming a bullish harami type of a candle. But most important factor to note here is that it took support at the 50-week moving average, which is somewhere at 101.03 levels. So that is where it took support. In the monthly, it has formed a solid red candle and it is forming a bearish engulf type or bearish harami, but a big bearish harami. So, but that is not a cause for concern, because the 50-week moving average is acting as a very the 100-week moving average is acting as a very strong support for it. In the daily, it came down significantly, but it has formed a reversal and it is going up. Now in the daily chart, it is below all the simple moving averages. What is that? All the simple moving averages: 50-day simple moving average, 100-day and 200-day simple moving average. However, it is just about to go to the forming a rounding bottom. Okay, but still the 200-day is above. So hence it has to take out the 200-day moving average, simple moving average. Then you have 150, which is above. Now, when we analyze the euro versus USD, it is exactly the opposite. What is that exactly opposite? In this week, it formed both GBP and GBP versus USD and euro versus USD. It formed a solid red candle, but the 100-week moving average is acting as a support. There, it was like what you call 100-week is acting as a support, and euro in the monthly chart, in the monthly chart, it has formed a solid green candle. In the daily chart, it is taking support at the 50-day moving. Okay, so it is taking support at the both the euro and GBP versus USD. It is taking support at the 100-week moving average in the weekly chart, and in the daily in the monthly chart, GBP is below the 200 month moving average. It is about to touch that and take it above. That is what is very important here. In the daily chart, both GBP and Euro is falling significantly, but we don't expect big down move in this coming 5 days. Of course, at the end of it, will give the levels. Okay. So next is GBP versus USD versus GBP. USD versus GBP, it is significantly going up. In the daily and weekly chart, it is above the Bollinger upper band moving, and in the monthly chart, it has formed a solid green candle and moving up significantly. So at this pace, even 150 is possible, it looks like, in the near future. Near future means need not be in June or July, can be in September. It can even touch 150. Now lastly, when you go to USD versus INR, USD INR, it is taking support at the, it has formed a small inverted hammer candle. Normally, if that candle happens and if it is at the support levels and support is not broken, there are chances that it can bounce and go up. Why it can bounce and go up? Because below which is the 50-week moving average, which is at 81.05 levels, and in the monthly chart, it has formed a red candle. As I have been telling for the last few months, it is forming a rounding top. There are two things that it can happen. It can break and significantly break below, or just go up. But in the daily chart, what happened? It has already broken below the 50, 100 and 200 day, but it made few attempts to cross the 200 day moving average, but 200 day is vertically going up like this while the price is trying to go up. But what we feel is that it is forming a rounding bottom at the top, which means at some time in the near future, it will take out the 200 day moving average, meaning it will cross above that. Of course, above which is the 50 and 100, which is very closely there. Once it takes out, then we will have it going up strongly. But at this point in time, this level is holding. With all these things, what do we expect for the closure for June month for dollar index and components? Dollar index, we expect it to close between 101.434, the lower level, that will act as a support. What is that? 100-week simple moving average. I have been telling that. And on the upward side, it is going to be 50-day simple moving average, which is at 102.502. So we don't expect it to close above this by the end of this month. Euro versus USD, it is 1.0889 current price, and we expect it to not to go below 1.0836, which is the 100-day simple moving average. And on the upward side, it is the May high that it formed, 1.1092. Because even if there is an up move that is coming in this week, the previous month's high, it cannot close above that. It might even touch it, but it cannot close above that. GBP USD, same story. It is 1.2633, which is again the same 100-week simple moving average. And what we expect is 1.2867, which is the 50-day simple moving average, that will act as a resistance for it. USD GBP, we expect the previous week's opening, which is at 141.74, that will act as a support. It will not close below that, while resistance is very difficult to give because there are no levels available, because sky is the limit. It has taken out all the previous highs and other things. Hence, no, it is extremely difficult. Still, we are giving 146.30, that will act as a it might close below that level considering the technical aspects. USD INR, we expect it to not close below 81.597, which is the 50-week simple moving average. At the resistance, at least this week, because the month end is going to be over, it will hold 82.091, which is nothing but the 200-day simple moving average. That will hold at least till June. Okay. In part 3, which we will put a third video, we will be discussing about 3 components. What are the 3 components? US 10-year Treasury yield, Brent and NYMEX. Thank you.